Hello friends, a very warm welcome to my channel. In this video, we are going to talk about a company called Prince Pipes. This company manufactures PVC and CPVC pipes and fittings. It is one of the largest manufacturers in India. And if you invest in this stock, you are indirectly playing the construction and real estate theme in India, as these products are ancillary to that industry. There are a lot of government initiatives like Nal Se Jal, and there are huge amount of capex done by private companies also. So the runway for growth in this sector is good for this decade in the Indian economy. If you are new to the channel, please do subscribe and hit the bell icon to get notifications of all the new videos. And if you are not a part of our Telegram channel, do consider joining today by searching my name on Telegram. As on Telegram, we discuss daily morning what is the market outlook for that day and the coming few days, and a lot of new results, views and ideas on the Telegram channel as well. So let's begin the analysis of Prince Pipes, and I hope this video will help you to take a decision whether to stay invested in this stock or to take a fresh entry in this stock. So the flow of the presentation will be like this. We start with understanding the business model of the company in brief. We look at the chart, how the stock has performed in the last couple of years. We look at the main financial parameters which help us decide how is the company performing in the recent years. We discuss the reasons for the fall in the share price of the company. We'll discuss the outlook of the company, how is the industry going to perform in the next few years. Then we talk about the valuations, which are very important, and based on all these things which we have discussed, we'll decide what could be our view in this stock. So starting with the business model, the company is into manufacture of polymer pipes, which is in simple words plastic pipes, and also fittings and several other new products like storage tanks, and now they are also venturing into the bathware segment. This company ranks among the top 5 companies in India in this sector. They have a wide variety of SKUs of more than 7,200 SKUs in this segment. This company is into business for more than 3 decades now, and they have 7 manufacturing units spread across India. And now the company is looking at venturing into the Eastern India as well. The company is a very innovative company, as they have regularly done collaborations with German companies to introduce new technologies in India and manufacture new products. And under the same company, which is Prince Pipes, they are venturing into several new brands and sub-brands and new segments also. So if you look at the stock performance after the IPO, the stock took a small dip, and during the COVID period it consolidated for a while and gave a very strong upward movement of nearly 750 to 800 levels. Then from there it witnessed a sharp fall and went into the consolidation, and now it is trading sideways for more than a year. So in one way the stock is undergoing time correction now. What we are going to understand in this video is what is the reason for this fall and the time correction, and we'll also try to judge whether the time correction is about to get over or not. Looking at the financials of the company in the last 5 years, the revenue has shown a steady upward movement from about 1500 crores in FY19 to about 2800 crores in the trailing 12 months, which is almost 2x in 5 years, which is a good number. When you look at the EBITDA, it was steadily growing from FY19 to FY22, but in the last 3 quarters, the company has witnessed sharp pressure on the margins because of the fall in the PVC prices, and the EBITDA fell down to just about 250 crores. The EBITDA margin saw a steady increase from about 12 to 18% in FY21, then it started a decline of 16% in FY22 and further downward to about 9% in the trailing 12 months. So this is the main reason for the fall in the share price. One good thing to note in this stock is in the last 9 months, which is the 9 months of FY23, still the company has shown growth in terms of volumes, which is almost 21%, which is a very good number. And the working capital days have improved to 44 days compared to earlier, which is about 65 days. So in spite of all this pressure on the margins, the working capital efficiency has improved, and there is a improvement in the sales volumes. The company has paid back all the long-term borrowings, and in terms of long-term borrowings, it's a debt-free company, although there are some small amount of short-term borrowings which the company has. Now, as we have discussed, the pressure on the margins was the main reason for the fall in the stock price for the company. Otherwise, in terms of the top line, the company continues to grow well. This pressure on the margins was created by a fall in the PVC prices, which is a material which is used in the manufacture of the company's products. Another reason for the fall in stock price is post-COVID, there was a euphoria in the market, and due to that, the valuations of the stock became excessive, and now the valuations are getting normalized, and that's why the stock is into a time correction. There is a lot of competition in this space, where market leaders like Astral are going for capacity expansions, and several other companies like Apollo Pipes are also coming in stiff competition with this company, and that's why we cannot expect such companies to get a very high PE number. Now let's talk about the growth outlook of the company in the near term. The volume growth continues and the company expects the volume to grow more than the industry growth rate by about 2 to 3%. The management generally refrains from giving a guidance in terms of numbers if you listen to the recent earnings calls, but they expect that the company will grow faster than the industry growth rate. The spend of the government in this sector is increasing. If you listen to the budget, there are several schemes which the government has started, and the amount which the government is going to spend in that schemes, the government has increased their budget allocations in the recent budget as well. So these kind of tailwinds exist for this industry. The company has started a new segment which is the modern plumbings division, and the company has collaborated with several foreign companies, especially the German companies, to bring new technologies into India, and they are continuously launching new products in this segment. Now that the PVC rates are normalized compared to earlier, this normalization is leading to increase in demand in this industry. The fall in the PVC prices is more or less bottomed out, and now there is an increase in the recent times by about 12 to 15 rupees in the PVC resins prices, which is giving comfort in terms of margins to these companies. Until now, this company has good presence in the northwest and southern part of India, and going forward the company also plans to establish a manufacturing unit into the eastern region. The company is also venturing into a new segment which is the bathware segment, and very soon, maybe in a quarter or so, the company will launch its new range of bathware products which they will be selling using their same distribution channel, which will bring in lot of synergies in this new business in the existing business. If you look at the industry outlook, on an average at a global level, India as an economy still consumes a very low amount of per capita pipe consumption when compared to the other countries. It's only 11 kgs in India compared to the other countries. As you can see in the US, it's about 110 kgs, Europe it's about 65 kgs. So there is a huge scope of growth in terms of per capita consumption in India. If you look at the growth rate in this sector from about FY14 to FY19, this sector grew at about 10 to 12% CAGR, which is the industry itself is growing in double digits, and going further, it's further expected that the industry grows about 12 to 14% CAGR. So by these facts and figures, you can understand that there are decent tailwinds at the industry level itself. When you look at the valuations during that euphoric movement in FY21, the valuations went as high as almost 4 times the revenue for this company, and now they are trading at around 2.5 times, which is near the median valuation of the last 5 years. So in terms of valuation, now the stocks looks reasonable. Now, what should the investors do who are already invested in the company and who want to take fresh positions in the company? So if you're already invested, you can continue to hold with a time frame of about 1 year in mind, as more or less the worst for this industry in terms of margins are behind. And if you are holding from higher levels, you can gradually even accumulate or average the stock. And somebody who wants to enter afresh, this could be a decent level for entry, and quarter by quarter, as you see the improvement in the performance, you can continue to accumulate the stock. One thing you should keep in mind that this is not a buy or sell recommendation. We are only discussing this stock as a case study for our understanding purposes and educational purposes. So I hope this short, crisp video give you a clear understanding of what the company's business is, what's the reason for the fall in the stock price, and how the company and the stock price is expected to perform in the near term, and this helps you take the right decision for investing in this company. So this is about Prince Pipes. I hope you like the video. If you like it, hit the like button and subscribe to the channel. And if you want me to make videos on your favorite stocks, do mention the name of the stock in the comment section. Thank you for watching and have a wonderful day.